I'm going to keep these sort of things short and sweet, but I guess the purpose of this video is actually to explain how to buy stocks. Now, I guess when you hear this, you're probably thinking, look, how to buy stocks is simple. I just log into my brokerage account. But this is actually more sort of about the methodology of actually building a position while you're buying a stock. So you're kind of getting in there. So often, the way that it works is you see something that seems like a really great deal and you might go, look, I'm going to put $5,000 in, and you just straight away you put $5,000 in, right? Then often what can happen is the stock will move. It'll either move up and you'll be really happy, or it'll move down and you'll be really upset because you're already in a position there that's kind of going down a lot. So one of the most interesting things that I've been thinking about, and is a great tip I've been using when buying stocks or crypto or positions, is thinking about how you're actually going to build your position. Right, so in the hedge fund world, obviously these hedge fund managers are dealing with really big amounts of money. So they can't just go and buy $10 billion worth of a stock. They have to slowly accumulate that stock over time, right? And these guys are still able to make big profits on these billions of dollars. So I think we can learn something in the way that they select their stocks and build their position. So the first thing here to note, that what I do, is to buy positions in thirds. Now, the reason for buying positions in thirds is it's kind of a really simple framework to use that can really help you to be able to make the most of getting into a position and making sure you can make a considerable amount of profit off this. So my example here would be, say, a stock that is, you want to buy $9,000 worth of this stock. What I would recommend doing is, first things first, is just buying a third. So just buy $3,000 worth of this stock and then wait and see what happens. So the good thing is it could go up, and the great thing is you're part of this move on the upside. But you've got to think about this as well, is that there's a slight negative that you could have had bigger gains if you just put the whole amount in. But in the off chance that the stock does go lower, this is a buying opportunity. The same way that when there's a sale on with clothes or something like that, if normally it's 100 and now it's 50, you want to take advantage of that sale. So what I tend to do is wait, and if it comes down, I'm really happy with that, because if I've done my research and I believe that this is a stock that, or crypto, that is going to do well in the future, what you can do is you can buy another third and then you wait. And maybe it goes even lower, maybe it drops another 30%. And if you've done your research and you think you know what you're buying, and you're not just listening to Facebook groups or like influencers, and you really believe in the long-term value of this company, then you can buy the third. So essentially you've got 3,000 at first, 6,000, 9,000, whatever sums of money that you're using. Now, I think the great reason for this is that it allows you to accumulate more stock. Because obviously it's cheaper, you can buy more shares with those portions of thirds. And the second thing as well is it actually lowers your average buy-in price. So if you buy $9,000 worth at $10 a stock, you're all in there basically. But however, if you bought 3,000 at $10 of stock at $10, and then you bought another 3,000 like $8.50, and another 3,000 at, let's say, like at $7,000, well, essentially what you've managed to do is you've managed to get your average price in there to like about $8 instead. So it means that any increase above $8 is you're making profit. Whereas if the original $9,000, you're not making profit unless it goes up over $10. So this is a great way of thinking about how you can invest in markets, build a position, and take advantages of down moves to increase the amount of stock that you own and increase the likelihood of you making profits in the future.